Tip series, and before I start, what I'd just like to remind you is that if you sign up on our website behindthebalancesheet.com, you can get our free newsletter and access to our club site with loads of free training materials. And if you want to take this a bit further, don't forget to check out our investing courses for private investors. They're really good. We've got lots of students and everybody's really happy. But let's get on to investing tip number 8, and I'm going to start talking about moats in the next few videos. And let's kick off by looking at what a moat is. I said last time when I was introducing the subject of quality that it was Warren Buffett who coined the term economic moat, and he described it as a structural impediment which obstructs competitors from entering your company's markets and reducing its return on capital. And the effect is a sustainable high ROIC, high and sustainable returns. And that's what we're looking for when we're buying investments. So the first moat that I want to discuss is economies of scale. And these are often thought of as a moat, but in my view, in reality, economies of scale are very rarely a true moat. Take an example, Coca-Cola. Coke's got a world-leading brand. It's got massive distribution power. It's got huge advertising budgets. It's a scale very rare in an industry. But has it got a moat? I mean, Pepsi's not as big, but it's not that far behind. And small competitors can compete locally. A new drinks brand could compete, for example, in the UK market. So size is a help for a Coke. It's a really big help. But it's not a moat, because this is what a moat looks like. And it's impregnable. You can defend that one little bridge very, very easily. Coke can't defend itself to the same extent. If you're looking at economies of scale, yes, they can be a moat, but the company needs to be such of a size that makes it impregnable. And I think there's relatively few examples of that. Companies like Amazon and Walmart are enormous. They've got huge scale. They've got huge buying power, which allows them to offer much lower prices than their competitors. That is a type of moat. It's not as effective a moat as many others that we're going to talk about in subsequent videos. But be very careful. If you think that economies of scale are a moat for your company, think about that concept of impregnability, because that is what will ensure that you have enduring high returns. I hope you've enjoyed this. Don't forget to sign up and subscribe for our video channel and see the future videos and not miss any. Thanks for watching.